Today, we're diving into a powerful investment strategy that can maximize your profits. We're talking about utilizing LEAPS options and dollar cost averaging. As we kick off 2025, the market is ripe with opportunities, especially after recent pullbacks that have set the stage for savvy investors like you to capitalize on long-term gains. In this video, we'll explore why now is the perfect time to implement dollar cost averaging with LEAPS options. Stocks like NVIDIA, SoundHound, AMD, IonQ are poised for growth. They are in the AI and quantum computing sector. We'll show you how to take advantage of their upward trajectory. Plus, we'll discuss the explosive potential of crypto stocks like MicroStrategy and Mara, along with promising companies like SoFi, PayPal, and Rivian. So whether you're a seasoned investor or a beginner, stick around and watch this video. We're going to unpack some strategies that will maximize your profits this year. Before we get started, make sure you hit that like and subscribe button down below, and be sure and download the free options workshop in the link below. Dollar cost averaging is a powerful strategy that can help you stabilize your portfolio during extreme volatility and market fluctuations. The concept is simple. Instead of trying to time the market and guess when to buy, you invest a fixed amount of money at regular intervals regardless of the stock price. This disciplined approach allows you to buy more shares when prices are low and fewer shares when prices are high, ultimately lowering your average cost per share over time. Now, the concept of dollar cost averaging is pretty simple. If you want to invest, let's say $100 a month in a stock and the price is $10, you buy 10 shares at $10, which is $100. Now, in the following month, if the price drops to $5, you buy 20 shares, the same $100, in the following month. So this takes out all the stress of the price fluctuations. Now, what's exciting is dollar cost averaging isn't just limited to buying stock shares outright. It also applies to LEAPS options, and you can utilize LEAPS in exciting sectors that are growing like quantum computing and AI and fintech stocks. So dollar cost averaging, utilizing LEAPS, is a powerful way to maximize profits and build wealth in sectors that have been hit recently. Now, LEAPS stands for Long-term Equity Anticipation Securities. And these are options that are 9 months to a year, even out to 2 years until expiration. Now, the beauty of LEAPS is they're very capital efficient. So if you want to buy 100 shares of a stock outright versus a LEAPS option contract that controls 100 shares, the LEAPS contract may cost you a third of what it costs to buy the 100 shares outright. In addition to capital efficiency, LEAPS offer leverage, enabling investors to amplify their potential returns. When the underlying stock experiences significant price movements, the gains from LEAPS can far exceed those from direct stock ownership. This is particularly beneficial in bullish markets where a relatively small increase in stock price can result in substantial percentage gains on your LEAPS contracts. For example, if a stock rises 20%, the value of your LEAPS could increase by 100% or more. This really shows you the power of leverage in maximizing returns. LEAPS also come with much lower risk than buying shares of stock outright. Now, if there's a big drop in the stock market and your stock price takes a hit, the max that you can lose utilizing LEAPS options, it's limited to the amount that you pay for the LEAPS up front when you buy it. So in summary, LEAPS are a game changer, and that's due to their capital efficiency, the leverage, and the lower risk. Dollar cost averaging is really about not timing the market and investing consistently. But as we move into 2025, it's a unique time and opportunity for utilizing LEAPS options and dollar cost averaging. This is due to the economic outlook going forward is very good, but there's been a recent pullback. The key to dollar cost averaging utilizing LEAPS is to have the confidence in the sectors and stocks that you're investing in. If you believe in the growth potential of companies like NVIDIA, AMD, or emerging players in quantum computing, now is the perfect time to take advantage of dips in the prices. By committing to a systematic investment approach, you can buy LEAPS options during downturns. This allows you to benefit from future recoveries without overexposing your capital. To effectively manage risk, you need to adhere to your specific lot size or tranche size and not overinvest in one particular trade too much. This ensures that you maintain a balanced portfolio and avoid excessive exposure to any single investment. By following these principles, you can navigate the current market volatility with confidence, positioning yourself for substantial gains as the economy stabilizes and grows throughout 2025. As we move into 2025, there are several stocks right now that are ideal candidates for utilizing LEAPS options. NVIDIA continues to dominate the AI landscape with its powerful GPUs that are essential for machine learning and deep learning applications. As AI adoption accelerates across various industries, NVIDIA's technology positions itself for significant growth. SoundHound has made remarkable strides in voice recognition and natural language processing, seeing a staggering increase of nearly 990% in 2024. With its cutting-edge AI solutions, SoundHound is well positioned to capitalize on the growing demand for voice-activated technologies. And AMD is not just a competitor in the semiconductor space, but also a key player in AI development. Its high-performance chips are increasingly being utilized in AI workloads, making it a strong candidate for long-term investment as the sector expands. IonQ is at the forefront of quantum computing innovation, experiencing a dramatic stock surge of 422% over the past 3 months. With its focus on developing practical quantum solutions, IonQ presents an exciting opportunity for investors looking to tap into this transformative technology. Marathon Digital Holdings and MicroStrategy are two crypto stocks that are poised for explosive growth in 2025. Both firms have positioned themselves to capitalize on that growth in crypto, and especially as Bitcoin's valuation continues to rise. MicroStrategy has seen remarkable gains, with its stock surging over 360% in 2024, driven by its aggressive Bitcoin acquisition strategy and strong institutional interest in digital assets. Marathon Digital, or MARA, is known for its significant Bitcoin mining operations, and it has also garnered attention. The company mined over 2,500 Bitcoin in Q4 of 2024 and is projected to generate substantial revenue as Bitcoin prices climb. With the recent introduction of the Bitcoin ETF facilitating increased institutional investment, both MicroStrategies and MARA are well positioned to benefit from this influx of capital. Incorporating dollar cost averaging and buying LEAPS options can really help you to maximize gains and minimize risk. So let's jump into a couple of examples on the option trading platform and show you how it's done. All right, guys, let's take a look at a couple of trades. The first one's going to be AMD. We're on the Tasty Trade option trading platform. There's a link down below. This is the one I utilize along with Mumu. Great for option trading. This is the tab that I'm on right now. We punch in AMD right here in the upper left, and then click on this little tab right here, and then you can go to the financials. And then you can see right here the income statement, and you can see the revenue and net income is increasing and year over year, and the balance sheet looks great as well, assets versus liabilities. And then what I like really now about this, we've got the RSI down here, so we're at the lower end, which means it's oversold. Good time to buy. Now on the 1 year chart, and again we're right here on the charting page, you can see we're way down. I don't think it's going to go, I hope it's not going to go much further, but my target for AMD is $200. It's at 116 right now. So I'm expecting a move up. It's going to do well this year, and this is a great time to get in and buy a LEAPS. So if we go to the trade page right here, click here, and then I'm going to go out to the January 2026, so out a year, and we're going to click on this. We're on the table mode and trade page, and we've got the different option chains here with the different expiration dates here, and we've got the weeklies here and then the regular option chains. But I'm going to go out to January 16th, 2026 and click and open that up. And then right now we're at 116, so we've got this orange line right here at 116. We're 368 days to expiration. We've got puts on the right, calls on the left. So we're going to buy a deep in the money call. Actually, I'm going to only go to the 110 because I'm so confident this stock is going to go up. I'm going to spend as little as possible, but I'm going to go to the 110 strike, and I'm going to click on the buy or the ask on the call side right here, and $26.90 is the cost. However, we'll click the mid price, $26.80, and you can see these are pretty liquid, only 20 cents wide. This is really not $26.80. There's 100 shares of stock that each option contract controls. So this is really times 100. So it's $2,680 or 75 to buy this option contract right now that will duplicate owning 100 shares of the stock outright. So $2,675. But if you were to purchase 100 shares at $116, we're talking $11,600. So much less than even a third the price to control the same 100 shares. Now, it controls it to this delta 65%, 64%. So it's pretty close, but not completely, like controlling 100 shares. But at the same time, the max you can lose is $2,675 versus if you own those shares outright, you can lose a lot more. Now, if we go to the curve mode right here, and then analysis, and then I scroll over, you can see as the stock price increases and goes up, we make money just like owning the shares outright. So we hit review and send and place the trade. Another one that I really like right now is Marathon. Another one that I really like right now is Marathon Digital. Now, you can see the chart here, RSI way down as well. And we're just below that 200-day moving average in the yellow. We've got the 13 in the red and then the 50-day moving average in the green. But I like it. I see a floor right here, and we're at $17. We've had a drop. Now's a great time for a LEAPS. So we punch in Mara right here in the upper left, and then we go to the trade page, and here's the option chains. Puts on the right, calls on the left. Well, right now, you've got the different days to expiration. So let's go a year out, 368 days, open up the January. We've got the calls on the left again, and I'm going to go to the 10, and I've got several of these on already. But if we click on the buy, it's $10.50, so we can buy this for $1,020 versus if we were to buy 100 shares of Mara right now, it's $1,726, so $1,726, so quite a bit less. Now, one other thing that we can do, okay, so we hit review and send and place the trade. One other thing that we can do, once we place that trade, we can sell weekly or monthly calls against it. So I can sell and collect $100 and sell the 21 call against it and collect that $100 per month, basically, for selling a call. That makes it a poor man's covered call. Let's go back to AMD real quick and take a look at selling calls against it. And I'll only throw that call on and sell it on a big up day rather than put it on right up front. So if we go to that 368 days, we buy, what were we buying? The 110 for $26.75. Now, if we close that and we go out and we sell a call against it, you see it's going to bring down the cost of this. So we can sell the 130 call, so that allows $15 movement upside, so we could make money on the LEAPS at the same time collect $300 per month. It brings down the cost to $23.66, and affects the buying power. So you can see how it brings down the cost. And you can continue to do this month after month. So in less than 6 months, you can own and control the LEAPS and control 100 shares of stock outright. That is the plan. Hit review and send and place the trade. All right, guys, be sure and hit like and subscribe down below. Remember to download that free options workshop. Leave a comment, ask a question. I answer everyone. Let me know what you're trading. Are you buying LEAPS in these AI stocks and crypto stocks or something different? Let me know. Thanks for watching. I'll see you in the next video.